We're live.
Hi guys.
Rebecca Steinhaus here with Remax Services and Craig Stelter of Cross Country Mortgage.
Hello.
For episode 4 of Cross Country Conversations. And today we have our special guest, Michelle Bee Bellisari.
Hey guys, how are you?
You may know her from Remax Services or soooboca. So she has some questions for Craig today.
I do. Do we want Craig to introduce himself? Craig, tell us a little bit about Cross Country Mortgage.
Sure.
Okay. Just to recap on the last one.
Yeah, so again, Craig Stelter with Cross Country Mortgage. We're a nationally licensed direct lender of residential mortgages, and we brought today. We talk about different subjects every week, or every other week now, actually.
Yeah, every other week.
But today we tried to switch it up a little bit and polled the audience and our networks and got some questions that prospective homebuyers have about the mortgage process, try to dispel some potentially bad information, and let's fire away with it.
Okay. So I did put a post out there. One question is, what is the difference between private and lender insurance?
Mortgage insurance.
Mortgage insurance, yeah, on
Sure.
a loan.
Okay. Yeah,
That's
so
a good question.
yeah, it's a great question.
Yeah.
Yeah, so high level, when someone's not putting down 20%, they're required to carry PMI, which stands for private mortgage insurance. Okay, so on any mortgage where someone is not putting down 20%, on a conventional mortgage, there is a requirement for PMI. And so PMI can come in a couple of different forms. The most common form is a monthly fee that gets paid to the mortgage insurance company or to the lender that writes the loan that insures them against default. Okay, so you got
How high is that fee usually? Because I know some people are scared of it.
Yeah, so I mean, it's really, if someone has high credit, it's not very expensive. So if someone's doing 5% down, has a really good credit score, it's only about 0.4 of a percentage point per year. And so $300,000 loan, it's about $1,200 per year divided by 12, so about $100 a month.
Okay.
5% down,
Yeah.
really good credit. So if you're
Yeah.
putting down 10%, it's a lot less than that. So an alternative to monthly PMI is something called lender paid mortgage insurance. So instead of PMI, it's LPMI. And so what that really is a borrower is opting to take a higher interest rate so that the lender can buy out their PMI for them. Okay, so instead of having a monthly PMI, now you just have a slightly higher interest rate. And really that would only be for someone who isn't sure how long they're going to be in the house for. First and foremost, it should really only be for someone who's got a very high credit score, because the cost of lender paid mortgage insurance, the actual amount that the lender has to buy out, is a lot of money. And so it really only makes sense mathematically for people with very high credit scores. And then from there, it's just a math equation to see how long you need to be in that loan to break even versus, say, monthly mortgage insurance. So if in an example where someone's going to own a home forever and ever, monthly mortgage insurance is the right option, because you're going to have a lower rate and eventually the PMI goes away. So if someone is not sure how long they're going to be in the house, lender PMI may be a better option because it's the short thing. You're definitely going to save
Right.
money per month.
Right.
Right?
Right.
And again, you know, any mortgage person should be able to compare them side by side and be able to calculate when that break-even point is, and then the borrower can make the decision.
So the average time that we see people staying in their homes, what are you seeing?
The average is about 8 years.
About 8 years.
Mhm.
So with that being said, that's not a long time.
So 5% down PMI
Right.
takes 8 to 9 years to go
Right.
away
Yeah.
if you're not overpaying the loan and if the property's not appreciating. It just
Right.
kind of goes away once you have 20% equity, which takes about 8 years.
So you just brought up something which I think is a great thing to share. If the property is building equity, what would you suggest that someone do in that case so that they remember to check that?
So you're talking about this in the case where someone has PMI?
Yeah.
Yeah, so Michelle's question is about when would be the right time to get rid of monthly PMI. So if you buy a home with less than 20% down and your property, maybe you got a great deal on the house because Michelle's your realtor, and now the value has appreciated over the next few years, you can call your loan servicing company and request them to analyze the property to see if there's enough equity to get rid of the PMI. Okay, so if the property hasn't gone up in value, there's only two ways to get rid of it. You either have to have expedited the payoff of the loan to get below 80% of the initial value, or just over time you have paid down 20% equity. The third way though is if the value's gone up a lot,
Right.
you can call the lender. They'll usually send an appraiser out to the property, or they'll run some kind of valuation on their computer and tell you if you are a candidate to have it removed.
Yeah, so you wanna put that like in your calendar to at least be checking maybe once a year, just to see what's
Yeah.
going on, so that, and also, since we just came off of tax season, wouldn't that be a good time to take some of your bonus money, tax refunds, and put it towards?
If it's close enough, yeah.
Yeah, okay.
You should always just keep in touch with your realtor,
Yeah.
have them do an analysis on the property,
Yeah,
right?
exactly. Okay, that was
You
good,
can know you
I
can get
like
rid of
that.
Right?
Yeah, or something.
Okay, I have another question.
Let me just parlay on that for one
Oh, go
second.
ahead.
So people always ask about the difference between FHA and conventional financing.
Mhm.
One of the main reasons that it's not always the best thing for people to do FHA financing, if they have the ability to go conventional,
Right.
is because FHA mortgage insurance stays with the loan forever. Unless you put down 10% initially, which most FHA deals don't, the PMI stays with the loan for the life of the loan.
Okay, so now I have two
Conventional can go away.
questions.
Right.
So FHA, which, if I recall, is also an assumable mortgage, correct? Is it still? No? They don't do that anymore? No? Okay, so somebody who had FHA and goes to sell it?
The mortgage doesn't transfer with the property.
No, I know that, but could someone who's qualified?
The person buying can't assume that.
That's what I'm
seller's-
saying.
No.
No? Really? Okay. Used to be. Okay, so here's my other question. Please explain the rising interest rate environment. Are interest rates the most important item in choosing a lender? If not, what is? And then what happens if the home doesn't appraise?
Dun, dun,
I like that person. Those are good questions.
Thank you, Bentley.
Yeah, so I'll start with the first part,
Yeah.
which is, what the most important factors are for choosing a lender. Rate is certainly right there. If it's not 1A, it's 1B. It's most consumers don't want to hear about service unless you've got the price. You got to have the price to be able to talk about the service.
Right.
We know in the industry that not all lenders are the same. There are some very good ones out there, but as real estate professionals and mortgage professionals, we know how a transaction is going to go if it winds up with one of the major banks or it winds up with a maybe less than reputable lender. And so I think it's there's quite a few different criteria you need to think about when you hire a lender. Of course, you got to look at the rate, you got to look at the price that they're charging for that rate, but also you have to know, you have to look at their reviews. You have to see how responsive they are. You have to see how clear they communicate. You have to know how fast they can close a deal, because in a competitive marketplace like South Florida, it's not just about giving a pre-approval letter. You have to, I know I personally, I get on the phone with half the listing agents on pre-approvals that we submit. They either call me or I call them. So you need someone on your side in addition to the realtor just to be able to get your deal accepted when there's multiple offers. So yes, you do have to have the rate, you have to be close, or you have to be competitive, but you also have to be able to execute and do all of the parts of the job, which isn't just closing on time. It's being able to close fast, and it's being able to communicate, it's being able to answer your phone when the listing agents call you and provide updates and all of that stuff.
Well, you're a trusted advisor. You guide us as well, along with the buyer. So it's really a team effort of communication and understanding if this happens, then this can happen, and the what ifs, like we like to know ahead of time, like, well, if the appraisal doesn't come in, then what do we do? So that was the second part of that
Yeah,
question.
so hopefully, it gives you a little more clarity on why you would choose a certain lender
Yeah.
and all the things that go into that decision. Interest rates are definitely ticking up, so that's just a fact. They've been going up steadily since the beginning of the year. When you are buying a property and getting a mortgage, it's always required that you get an appraisal, right? So the last part of that question was, what happens in the case where the appraisal comes in low? So
Just I always get confused on.
yeah, so look, there's
I know.
if your deal has a financing contingency,
Yeah.
right, then it's contingent on the place appraising, and there's a waterfall approach to when
Right.
this happens, right? And in South Florida, it happens pretty often because demand is faster than supply right now. Demand is,
Right.
people want houses faster than perhaps the comps have caught up to the neighborhood. And so there's a lot of times that people are willing to pay above what the last comp in the neighborhood sold for because they know it's worth it, right?
And the rent is going up.
Mm-hmm.
So when you look at the
Mhm.
pros versus the cons, if they wait and interest rates go up, I mean, it's a catch-22.
Yeah, the appraisers have to stay within a certain set of guidelines,
Yeah.
and so they have to stay within the comps for the area. I personally paid above my own appraised value when I bought my own house because I knew that the house that I bought had the windows that I was going to have to put in afterwards, had the window treatments, had the floors I wanted. That stuff has value,
Yes.
and it doesn't necessarily translate to the other house that's sold for $10,000 less.
Right.
I knew what I was getting, so in those situations it makes sense. So if you're buying a home, your appraisal comes in low. Obviously the first question is how low? Is it a surmountable difference or is it an insurmountable difference?
Right.
And so let's say you're buying a $500,000 house and you're off by 10 grand. May sound like a lot of money, but it's 2%. Okay?
Right. Right.
So generally the way it goes is the buyer tries to get the seller to eat the whole difference.
Mm-hmm.
Not always the outcome, right? And so the seller may say, no, I'm not gonna do that, but I'll come down 3,000. The buyer may say, well, I'll come up 4, and now you got a $3,000 difference, right? And you just, sometimes
Then
it's
we get other people involved.
well, I joke that the way that I know, because a lot of times realtors for some reason don't want to tell me that they think the house might not appraise, which
Oh, really?
I don't know why, because it's not like I have any control over the appraised value, but
Yeah.
the way that I generally know that an appraisal may come in low is because the realtors ask me where the appraisal is, 3 times a day.
Okay.
By like the 4th phone call, like, what's going on here?
Yeah.
So when it happens, and it happens, usually it's expected. It's very rare that we get an appraisal just totally out of left field in
Mhm.
our company. We have an appraisal management company that has really good appraisers. So there's not that many out of left field appraisals that come in. But when it happens, it's a negotiation, it's a conversation. Most of the time it gets worked out. Buyers and
Mhm.
sellers come together. I've definitely kicked in lender credits to make deals work
Mhm.
before. Realtors have done it before too.
Mhm.
But usually when it's a difference that is curable, it closes.
It's fixable.
Yeah.
Yeah, and I think that's a good question because a lot of times, depending on what market you're in, you're right. It's like goes back on the seller, but sometimes it's a negotiation between both of them to make it work. Look, the buyers vested money into their inspections, the appraisal and application fee. Sellers already moved out of the house in their head, typically, or maybe they found something. So you try to make it work.
If it's a difference that can be fixed, it's generally fixed. People
Yeah.
don't want to let deals fall apart. Everyone's vested, to your point.
And the appraisal it could come over. It could come in over.
It's
Oh,
all the
yeah,
time,
all the
too.
time.
All the time.
And who pays the difference on that?
There's no.
There isn't any. That's a good thing.
That's a good thing.
Yeah.
It's interesting when that happens.
Yeah.
But, well, here I have another question for you because this is coming up a lot. Older roofs and electrical boxes that need to be changed out because of insurance issues. Many times you have to explain to both parties, here's the reason why you need to replace something on the inspection, like let's use the electrical panel, because the buyer may not be able to get insurance although we do know that there are insurance companies that will do some insurance and give a new owner like 30 days to cure the problem. But if that's not the case, they can't get their loan, correct?
It could be a hard stop.
Right.
We'll allow, as a lender, if it's a
Philip,
sticking
out there?
point,
Yeah.
We have another special guest.
Are you guys too boring?
I don't think you're going to be seen
Yes,
on
bring
site.
the-
Come on, bring
We're-
your chair
we're-
over here. Over here.
We'll scooch over.
We'll scooch. We're
Do
scooch.
we have any comments? Do we have any comments coming in? Alright, we're good then.
So and when that happens, like what you're saying, and what I'm finding out is there's options to get the insurance, and maybe the buyer has to take a little higher hit at first. Once they cure it, then it can be reevaluated, but to get their loan,
I haven't had a electrical box quash a deal. I mean,
Yes.
generally it gets worked out.
Yeah,
Or we do an
I agree with
escrow-
you.
We do an escrow holdback, or the
Yeah.
insurance agent can
Exactly.
do a temporary policy until it gets. Is that?
Let's
He
go
said that's
back
fine.
to bad.
Electrical panels we can usually figure out.
I know,
It's-
and they're not
Yeah.
that expensive anymore. People like years ago, they were, now they're like, and a lot of times I've had situations where buyer and seller will split the cost anyways.
I think insurance companies have really,
They're working with us.
yeah, big
Yeah.
time.
They had to. I'm sorry, I'm just gonna say that, they had to start working with us.
The roofs are much more of an
Oh,
issue.
roofs.
No, I totally missed this, but let me you may have even touched on it, I'm sure, but obviously,
David Searle,
interest
everyone. David
Oh yeah,
Searle.
this is my broker, David Searle, by the way.
interest rates.
Yeah.
Is he in it?
Yeah.
Interest
Oh.
rates haven't been going down. They've been going
No, we're
up.
talking
Very much
about
so.
that.
Question.
And it seems like to me that the interest rates initially may have given a little bit of a little supercharge into the market, and
Yeah.
a lot of buyers went in there. You know, when it went like 4 and a quarter, 4.5, and now as I think it's right around 4 3/4 ish.
Mhm.
You know, so have you seen a slowdown in purchase contracts coming in?
I haven't seen a real slowdown lately because of rates.
Mm-hmm.
I haven't. Most of the deals that we've been seeing in our market, the people need to live here. You know, it's been, most of the prices of the deals are people who are here for jobs, or they relocated from other areas, or they upgraded it. The interest rates aren't going to affect their affordability, because the uptick in rates from 4.5 to 4.75 is not life-changing money
Right.
for most people, or not a make or break. Clearly, if someone's been house shopping for 3 or 4 months, and where they started at 4 3/8 and now it's 4 3/4, they're not happy about it per se, right?
Right.
Yeah.
It makes the house a little more expensive, but it hasn't actually affected, on my end, I haven't felt a slowdown in things yet.
But the
Okay.
rental rates are so high
So
that when you start comparing the two,
Yeah.
I have millennials who can't, they can't really afford to rent.
Hey, you know?
I love my millennials.
I feel like 5%
But
is
yeah.
5% is a hurdle that's coming.
yeah.
Yeah,
We're still in the 4s.
Right.
So to your point, I think until we get there, and probably in the mid 5s, it's going to be business as usual,
Sure.
because it's not disqualifying a lot of people. I mean, a lot of buyers that would affect, I think, have been priced out just from property appreciation
Mhm.
already,
yeah.
in our area especially.
What do you think the reason it seems like the jumbo loans are less in rate than the less loan? Is it less default?
Lower risk,
Yeah.
more qualified buyer.
True.
It doesn't make sense
It
really,
was
because
never
we're
the
lending more
case.
money.
Yeah, it was never the case until we
Bigger
saw.
down payments.
And just to qualify that, what is a jumbo loan for our?
Anything, it's a loan amount
Thank
over
you.
$453,000.
Yeah. I was speaking to this is totally tangent, but I was to your point.
Yeah.
We tend to talk in jargon.
I know.
And I was showing a house, and then a neighbor came out and said, "Oh, I'm going to be listing a house." And I tried to talk to her about cooperating broker, and she's like, "Can you tell me this in English?" I'm like, sometimes you just get
That's
so
like
consumed.
LOL.
Yeah.
LOL. GNO, yeah.
Right.
I
Has
even
no
got
idea.
Craig sometimes when we're
Jumbo
doing
hot dog?
this. Yeah.
Yeah,
And I'm like, explain. Do we have a comment come in?
Oh,
Yeah,
you-
so Michael asked if someone is relocating and starting a new job, are there any issues they need to deal with in the job if the job's in the same industry?
Great question. So if
Regarding
someone's
being qualified.
I would assume so, yeah.
Okay.
so conventional mortgages and a lot of jumbo products will allow for some. If someone's moving companies, they're being say it's a new.
Transferred?
If someone's transferring within a company, it's business as usual. If someone's moving employers within the same industry, so the timing of when they start on the new job is really what it comes out to. So if today were the closing day on a purchase, for most mortgages, if you have a guaranteed employment contract on the new job, you can close today as long as your start date for the new job is within 60 days of the
Oh,
closing
good
date.
to know.
So you can close on a house, not have to put your family in a hotel, move, and then start the job up to 60 days later. The only, there's a lot of exclusions really, but like the main ones
Yeah.
are if you're moving companies within a different, or if you're transferring companies, different industry, or if maybe you were predominantly salaried and now you're going to be predominantly commissioned. Something like that could affect
Your-
your
Yeah, but
qualifications.
Yeah.
Craig will figure that out.
Figure that out. And just a fun fact, by the way, Boca Raton has, I think, the most headquarters in Palm Beach County out of any city in Palm Beach County, by the way. We have so many businesses that move to our fabulous city. So we get a lot of relocations. That's a great question.
Yeah.
Like,
Yeah.
really good.
It is.
He said not relocated by the same company. So I'm assuming same industry, different company.
Yeah.
Yeah, same industry, different company,
And you
being
get the
paid the same
offer.
way, no issue. You can close with a guaranteed employment letter as long as you start within 60 days of your closing date.
Got it. Got
Yeah,
it.
we use that one a lot.
That's a good one.
So what other trends have you seen,
So-
in mortgage purchase?
Yeah, so one piece of what we talked about before with appraisals that I wanted to just say is as a listing agent,
We can eliminate them.
yeah,
Oh,
You're
we're
good.
not gonna eliminate it? Oh, I heard we're eliminating it.
You know-
Oh, that's just a road run.
Oh, right. Forgot about that. Nobody needs us.
one thing that keeps
This
coming
is
up.
mine. Sorry.
Hold on.
All right, I'm done. Sorry.
Um,
Totally lost.
Sorry.
Yeah, I'm
Sorry.
So, one of the things that happens a lot is when you're on the list side of a deal, you get that call from the appraiser. Now your entire deal rests in the hand of this appraiser, right?
Mm. One
And
man's
so-
opinion, as I say.
Yeah, and I suggest to everyone to interview that appraiser when they call. You get the call from the appraiser.
We're gonna do that.
You may, if you're in, like the neighbor by the Oaks or one of these neighborhoods that's really
Yeah.
it's not likely that you're going to have an appraiser that lives in that exact neighborhood, but you can. But
I mean, more times than not. I mean, 99% of the time, the appraiser that appraises it low, there's a reason why it
Right.
was appraised low.
Yeah.
In all honesty,
Yeah.
yes. Is it worth it? Yeah, it was worth it to one buyer
Right.
that was willing to pay over market value for the property. But the lender, the appraiser is justifying, the lender's interest in protecting it. So I get it. I made a joke, but a lot of times, do they still use appraisal boards like you used to have an appraisal board where I know you can't select them, but let's say
It's
there
a
was
panel.
10 or 12
Yeah.
people
Like a
on the
pool.
panel,
We have
and you kind of have some degree of relationship, even though you're not speaking directly to them. Like, all right, this one has done already. Several of those in those subdivisions.
Yeah, I don't know if you were sitting here before when I said most of the appraisals that we have that come in low are not these out of left field low appraisals. Everyone's expecting
Yep.
it.
Right.
And so as a listing side agent, you've got to have the appraiser may tell you they're not going to listen to you when you hand them your comps, but you better believe them. If you hand them your research on why you listed the
Right.
house, where you listed, you're giving it the best chance of success,
Sure.
right? And so you might as well just be as prepared as possible. Make sure if the appraiser that calls you is from Miami and it's in Boca and they don't have a clue about the neighborhood,
Yeah.
you can
'Cause
call
I
that
love
lender.
Miami, by the way. Heart Miami.
You can call that lender and say, I'm not. We
We
need
used to
this
have a lot of
appraisal.
that happen.
We need it rotated.
Yeah.
I had an argument with the appraiser. I need a different appraiser.
Right.
Right.
You're not controlling anything. You're just
Probably not as a listing agent, but as the buying agent.
as well as a listing agent. You can
You could do that as
you
well.
can do that.
Okay.
That's really good to know. And the other thing is, which I think is important, is to have a conversation with your seller And so the expectations are there. Look, if there's low comps in the community and there's really nothing there and you've got whatever you've got to lay that groundwork, because I'm a firm believer in having that conversation up front so that if it comes in low, which hopefully it won't, but if it's there's no big surprise.
Well,
You know, it eliminates so
you're
much of the
absolutely right.
problem.
Yeah, managing expectations
Yeah.
is half the battle. Sure.
Yeah, agreed.
So as a millennial,
Yeah, millennials.
we you know, I mean, millennials has taken the market by storm, and they have specific needs, but it's the same needs that all the other generations have had. I think the stand-up comics just got paid more for making millennial jokes, and everyone kind of tagged on it. And, thank God they didn't use Gen X because I would still be in the fetal position in the corner of the house. So so you're much stronger. But going into because you're looking potentially down the road to purchase a house, purchase a car.
Yeah.
So as a millennial, what do you look for in a not just a real estate agent, but a lender? I mean, we're talking about cross country.
Mm-hmm.
What are you looking at a lender? What kind of guidance do you want?
That's an interesting question, Dave. I honestly don't even think I've thought about it. I think
That's so
I'm.
millennial.
Yeah. I'm just like, I'm gonna buy a house. Let's go. A cute little cottage, fixer upper.
Yeah,
Let's do
right.
it. No, I haven't
That's
really thought about
funny.
it, but to that point, I think I would look for a lender who is willing to. Okay, I got to take my realtor hat off first of all. So not as a realtor, I'm just as a millennial buyer. I think I'm looking for my agent and my lender to be able to walk me through the process, because I know, coming hat back on, my other friends don't know really what's going on and how the process even works. Even with some rentals that I've dealt with in the past, they even don't know the process, and I have to sit there and explain it to them. So I would be, as a buyer, looking for somebody to walk me through pretty much everything, tell me what debts and how my student loans are impacting that, tell me like what my mortgage would be every month, because back to rents going up, it's making more sense to buying homes. But what I've noticed, and including myself, is a lot of us haven't really saved for that down payment. So my thing is, okay, how much do I have to put down to keep a low payment and to try to veer away from that mortgage insurance? Because my cousin is like, I don't want mortgage insurance, but I think knowing that it's not as bad as we think it is good information. And I think a lender who is just, I don't know, able to help us
Guide us.
I think that's the biggest thing, because
Right.
we did
Take
not
you by the
learn,
hand.
as like a millennial, we didn't learn how to be adults. Like, I'm still not a real adult, you know? Like, adulting is hard.
I'm going to throw something out there, which I think is a good question, because gifting is allowed with a mortgage. I worked with first-time home buyers for a very, very long time with down payment assistance programs. Even the city of Boca has their SHIP program. Many times the buyers would also get gifted to help them through that hump. From, it doesn't have to be necessarily, or I may be wrong, a blood relative. They can just be gifted with the gift letter, correct?
Depends on
Sort
the type
of.
of loan. Most
Yeah, it's
loans,
depending on the loan.
Yeah, and that's like
So
another
maybe talk
thing.
a little bit about gifting.
most of the time, a
Gifted.
gift should be from a family member.
Okay.
Generally speaking, you have to get a little cute to work around that. So the real answer is it should be irrelevant,
Okay.
right? And so
Like a dowager countess says,
Like-
we have a royal wedding coming up.
I
That's my relative.
there's always a way.
About Saturday morning.
Would you like tea on Royal Wedding Week?
But yeah, the gifting piece was always fascinating to me, which I
Yeah.
thought was awesome.
It's
because
pretty easy now on conventional mortgages to
Yeah.
get a gift. So it used to be you had to give a blood sample just to give a gift, and people
Right.
were like, "Why am I
Right.
doing this?"
Right.
Right.
Yeah.
But on a conventional mortgage now, the only requirements are either the check and a signed gift letter, or a
Mhm.
wire receipt and a signed gift letter. You don't even have to provide the bank statement from where the money came from.
Well,
Really?
So it's really easy on the donor where it didn't used to be. Now for
Yeah.
FHA loans, You still need to show the bank statement,
Where it's
which
sourced.
can be a sticking point sometimes. But again, managing expectations. If your lender knows the rules up front and they know there's going to be a gift, and when you do a proper pre-approval, these are some of the things you go over up front. You lay it out. This is what's going to be required. I mean, I've talked to donors at pre-approval to make sure they understand what's going to be expected of them. Right?
Yeah, absolutely.
So-
Not to put you more on the spot, Miss Rebecca, but I always find it fascinating to find out, because really you're part of the biggest segment of the market that's coming.
Yeah.
And
Yeah.
Getting
and
up
it's
there.
so important. It's so important to kind of find out a little bit of the psychology of what, what younger people want out of agents, or want out of their financing partners and such. So one of the things that would be like, would you say that millennials?
I embrace that type.
No,
of
I
think
I think it's good.
Yeah.
I think it's better to be called the forgotten generation, with Gen X. But
Well, when you need to be able to
we
know
were
how to text.
entitlements, but then Gen Y took over that, so
Right.
now we're just the forgotten.
And we younger baby boomers, we killed everybody. So
Yeah.
you heard everything.
But-
I think you're right with that.
Yeah, I mean, would you say that there's so much information out there to overwhelm you? Would you say that millennials are trust people, or they're more cynical?
Another tough question.
Is it Yanni or Laurel?
Please.
It depends on what device you're listening to.
Here's what I'm gonna say, because I live with millennials. If you don't mind,
Yeah. We should bring them in. We should have a.
we can bring them in.
Next segment
We
should like
We
be
could
a
do that. That would be a
millennial.
lot. Kylie and Ellie are my daughters.
Yeah.
Millennials, and they're like Rebecca,
Exactly.
very
Yes, we can.
responsible, very hardworking, like cool.
Millennial Mortgage Thursday.
They're awesome,
We
right?
should do that.
But I think the one thing that's so important is that if you're a millennial, I mean, even me, I want to know that somebody can handle the dang technology. Can you send me a text message? Can
Yeah.
you send me an email? Do you know how to do a FaceTime? You guys are all about, you need answers now and quick. And then I will say to the girls, at some point, you need to pick up the phone, because there are just some
Yeah.
things you can text all day and
Yeah.
something that could take a 5-minute answer.
Yeah.
I'll tell you from the mortgage side, most younger people that I deal with, when I've spoken to them, I know that they've already done a bunch of research before.
That's
I've
what I
spoken
was
to them.
about to say.
So like some of the questions, sometimes I have to pump the brakes and just say, let me do it my way and get through my process, and we'll answer all those questions, because they've already done a lot of research prior
Yeah.
to talking, and we need to get to that point, which is good. I think it's really helpful, because I appreciate that people trust me in a huge decision like that, but I want people to really understand everything. And it's just, yes, they're going to know enough to get their house by the time I'm done with them, but I want people to know more about the process and really feel comfortable, because what can happen with people buying their first home is that
No, we're doing an Instagram story.
Live inception over here.
like,
Why not?
I want people to understand, but I more importantly, I want people to, I don't want them to feel like they got sold. I want them to really believe that they can comfortably afford it. I want them to understand what they're taking on, that they're buying the house. I want them to understand the process. I do as much as I can in a short amount of time to do that, but I do feel like the younger generation has read a lot about what they're doing. They know a lot of the questions to ask up front. To Michelle's point, I think the millennial prefers the less personal touch, and so it's really good when you can do both. When you can be as technologically efficient as possible in the process, but sometimes you have to slow down, have a deeper conversation, meet in person when time permits, or Skype or whatever, to really make sure that everyone's on the same page, because a lot of things, and everybody knows it, things can get lost in translation through email, you know how many times I've thought that I sent an estimate, I said, are you good, you understand this, and they didn't want to get on the phone with it, and then later on, whoa, wait a second, because they don't look at it.
Yeah.
You know, and I don't know if that's unique to millennials, by the way, but
No,
it's good.
I think
So
I think from and just in dealing with the younger generation is, I think it's interesting to me how they make their decisions, because most of them, it's like, don't believe everything you've read. You do have to kind of backtrack, like to your point. But the other thing is that they don't want personal communication until they're ready to make the decision.
Mm-hmm.
So like when you're answering the phone,
Yeah, good point.
Mouse.
yeah, when you're answering the phone or you want to call them, when you want to call them,
I'm kind of
they're not picking up the phone.
Mm-hmm.
They're not picking up the phone unless they're ready to talk to you.
Mm-hmm.
And when they're ready to talk to you, you better call them.
Yeah.
You know, so everything is very, and it's not unlike past generations. It's not like going, if you've ever, you know, we all kind of know Gary V. You
Love
know,
Gary
like,
V.
yeah,
Love
like,
Gary V. I listen to
you know,
his
it's
podcast
like
on my
the
way over
thank you
for
economy and stuff like that. You know, it's like going into Cheers and knowing your name and knowing your drink and knowing all that stuff. It's just in a different medium.
I think I was about to say the medium thing. I think you're right. Like with past generations, you didn't have the phone at you. It's funny. Like I tell people all the time. My elementary teachers would be like, "Oh, you're not gonna have a calculator on your hand every day." And now we're like, "Yeah, we do." So
No, we have a calculator, compass.
everything. No one writes in scripts like they told us we would.
Yeah.
But
Where's the abacus?
Yeah, exactly.
But yeah, no, it's just like we have all this research literally in the palm of our hands all of the time. So you say one word, like, and I do this all the time, even at work. Somebody says something I don't understand, I'm Googling it as they're talking to me. And like, if it comes to PMI or words that like we're saying that we don't know that you're talking to us about, we're sitting there Googling it and researching it. And we, like you said, do all that research prior. I've seen things on Pinterest, like steps to buying your first house, steps to like saving your money. So we're looking at that before we even go to you and saying, this is what I've done, this is what I've looked at now, like, guide me through the rest and tell me what I need to do.
So there's a commercial out that makes my skin crawl. That's with, not just because it's Quick and Loans, it just happens.
I was waiting
It
for
could be
that.
any more. But they have a commercial
The cue.
where there's a gentleman with a couple in his office, and he's explaining things articulately.
Is that a Cavaliers game, right?
Oh, I think I know what you're
And
talking about.
someone from Quicken pops up and like cuts the guy off and says, "Forget all that, press the button, and get a mortgage."
Yeah.
And then cuts. I'm like,
And
so
that's,
basically, think about the message
Talk
that you're
about
telling
second
people,
sentence
right?
right?
Like,
no, I think it's terrible.
Right?
yeah.
Horrible.
So, to that point, and a good segue, I think, how do you believe that we can improve the mortgage industry? Improve the financing industry, improve our better relationships with the borrowers, guiding them in the process, and keeping them knowledgeable, because there's so much information out there, and a lot of it's fake news, wrong information, because everyone has an opinion. But how do we better? Because I always look at better in the real estate industry.
Yeah.
Love to hear how you think that we could better the mortgage industry.
I think the lending dynamic, the actual lender that facilitates the transaction has to have both qualified professional dealing with the transaction, but also a really good back-end portal where people can self-serve some of the information that they need. It should be a combination, right? So I feel like a lender needs to have that system where people can update documents, see where they're at in the process. There could even be, we don't have this, so I want to have this, some sort of live chat feature where people can get questions quickly. But also it should be a combination of both old and new school methods, right? You've got to have the old man Craig and the young guy Nick. You have to have that dichotomy. Like you have to have.
That's a book.
You need to have like a personal.
What does that make me?
You need to have an individual person that can set the right expectations and meet with people one-on-one or talk to people and explain things. But then you also have to have the back end where people can get the answers that they want. So that, point being, this way no one ever waits for an answer.
Yeah.
Because that's what everyone wants now. I get calls later and later, earlier and earlier, on every holiday, on every, people want answers when they want answers. And the time that you don't respond is the time you're going to lose a deal because someone else will. And so you have to have answers for people at all times. And it's just not humanly possible for one person to do that. And so it's technology, it's automation, combined with personal touch, when possible. Transparency, right?
So I met with a buyer who I guess sets up brokerages with blockchain technology, and and it's coming. It's gonna blockchain with the technology of transparency essentially, and what blockchain technology essentially is is that it puts everything out there. You know,
Yeah.
like eventually we're going to have the history of a house, all the liens, all the insurance claims, all the square footage changes, anything that has been done with that property,
Right.
municipalities, any county, everything that has been done that you would normally do maybe with a title search, or maybe you would do with a title exam or something like that. There'll be still need for title companies, but it'll be out there,
Right.
And so that blockchain technology is also going to infiltrate the mortgage industry. In that mortgage industry, you'll know, like with the MERS,
Right.
the mortgage,
Right.
electronic, that was the first, really the first kind of step that they were doing blockchain technology, because they were trying to register the mortgage so you knew who owned the mortgage.
Right.
Because a lot of these attorneys would come in there and,
So we have technology now, where, especially someone works for a big employer, if I'm on the phone with somebody, I can press a button, and if they subscribe to this program that their employer does, they post all the employment information to a third-party site. I've been on the phone with people, pressed a button, had their last 3 years of base pay, commission, bonus, right then and there. So you don't need pay stubs. We accept that. We have something else called account check, where we can press a button. They give a code.
okay then.
Right. Borrower gives us
Everyone
a
under
code.
the dice.
We can get their asset information. It's going in that direction. It's going that direction where there's a lot more. It's going to be, I think, easier for buyers to provide a lot of that clunky information, and
Well, it slows
Stuff
down
that
the
slows them down.
process too when you don't have all that
You-
info.
and you're absolutely right, and the information is accurate. There
Oh,
is no
God,
fake
yes.
news.
No.
There's no it's like when you go on cryptocurrency and you go on to blockchain.com, you can see every transaction from that particular cryptocurrency all the way through.
well, think about it.
And there is no fake because it's gone out to
Yeah.
100,000, 200,000 people.
Well, I think too, what's so important right now for the mortgage industry and also the real estate industry is you've got to know what is coming down the pipe. Not like for next month, but next year, 3 years from now. Like, get with people that are smarter than you, who really understand that, oh, this is what's actually going to be happening in our industry in the next 5 years. Not like, an interest rate change, but here's the technology that's coming no matter what your age is, because that knowledge is powerful.
You're
And the
absolutely right.
transparency piece is so huge, and clearly we want it. It makes the transactions cleaner, it makes the closings better, but at the same time, I can tell you how many people just are like, they don't want to know and they're afraid of it.
Imagine this, we've had issues. Yeah, absolutely.
I mean, that's my inner geek
I
in
even
me.
tell our agents all the time. They're like, I'm scared to post. I'm scared.
No!
Imagine this. Imagine no need for seller's disclosures. There's no need for them.
Right there.
Because
Yeah.
the construction
there.
is there.
Yeah.
Whether they ever had termites and what date they had them at.
Right.
All the leaks, all the repairs,
Exactly.
all the things that have been done on the property.
Yeah.
Obviously unless the seller hit it. But, I mean,
Don't hide the
no.
sellers.
Well, if there was a permit pulled,
Right.
if there was a repairman that's going to have to start to register things, those are the things that are coming down. If you look at like Uber's CEO, he came out the other day and he's like, he's talking about flying cars. Like, oh my God! Like
Yeah.
you on your app, the flying car comes and picks you up and then flies you back, and there's no driver.
I'll be flying in that
Like,
with a
it's
boa
crazy.
behind me and a cocktail.
Think about from
Oh, sorry, Uber, we're not allowed to do that. We're
from a
but-
loan standpoint, think about if up front you're pressing. We have a lot of this technology. We just not everyone. We can't get the information from everyone. But think about if up front from a loan process, you can get accurate pay information, accurate bank account balances. You can run a check to see if they've ever had a foreclosure, bankruptcy, short sale, right? Judgment searches, divorce decrees, all that stuff up front, day one. In addition to the normal stuff, credit reports. So now there is no mistakes. There is no
What's the timeline
wasted
for that,
time.
Dave?
There is
What's
What's
that
the timeline?
for?
Like block technology.
So
coming down the
blockchain,
pipe.
in the next, I think blockchain, is taking a lot of the
Yeah.
market now. But you're looking probably 5 years. You're looking about 5 years down the line where we will have significant. We've already taken steps for it, even like the Palm Beach County tax appraisers. You know, they've started to put all that information in. And we had that meeting the other day. You know, all that stuff is really. What's that? We're wrapping it up.
Oh, I have one last
9 minutes.
question for you since we had that big crack of lightning. Just a reminder, right? Like, look, June, we know June 1st is coming. Fun. You're in the middle of getting a house, you got a mortgage. What happens if there's a hurricane out there floating around in the black box? What happens?
A lot of times insurance companies won't bind,
Right. Which means
your close is going to be delayed.
there you go.
So let's say you already paid
Yeah,
for
if you
that
did
policy.
that, you're good.
Yeah.
Yeah, the insurance company's alarm or something.
So
that's-
don't drag your feet,
Yep.
buyers.
Yeah. No. When,
Hurricane season, do not drag your feet.
yeah, you get that loan,
But
you know,
don't spend
approved.
this
Yeah,
week. I'm gonna
go
go
for
for
a
change
Get that
shower
damage
tomorrow.
insurance.
I need to get my water and.
Stuff
Your
happens.
peanut butter crackers and water.
Yeah.
Wine, peanut butter crackers and water.
Oh no, I'm mine.
All right, you're
Last-
millennial. I forgot.
That's right. The big thing of Grey Goose. We're good.
So this
This
is
was
every
fun.
Thursday, right?
Every other Thursday. So I think
Every
we
other Thursday.
came to a nice conclusion next
Thanks for being
next
here.
Thursday. I think that's the first week of June something. I think the millennial idea is great. We'll have millennials
Yeah,
do
we can
like
call
this
it an alley.
Q&A. Any of my friends who want to ask questions about how to buy a house, how the process works, come
Cool.
see our beautiful new office.
Yeah, millennials.
Any other millennial agents out there that want to see the new office and come ask questions regarding us young folks?
And speaking of communication, right here, I had some stuff this weekend. Great broker. No, really on point with some specific stuff, and it's about communication. And yes, Dave does answer his phone.
Dave always answers. But yeah,
And so does Craig.
So does Craig.
so 2 weeks, cross country conversations,
Alright.
episode 5. We'll do a millennial mix up.
Hashtag
I want
2
to
weeks.
do a little shout out, obviously,
Michelle B.
Craig, but yeah, Michelle B.
Thanks for
Soboca.
coming.
Hashtag Soboca
That's
in the
it.
house.
That's awesome that you came in support and.
Oh my gosh,
we
yeah,
very
this
much
office is
appreciate it.
fantastic, by
Yes.
the way. It's, by the way, just if you don't know, our office is out by Glades Plaza, Town Center. I was at 2J's for lunch.
Yeah.
It's just so well located in our other office in East Boca, Northeast Boca,
Yeah.
gorgeous. So agents, you really need to come and have a
We
conversation.
might have some networking events coming up, so
Yeah.
stay tuned for those too.
What's networking? No,
Michelle knows nothing.
nothing.
We'll teach the millennials.
Between you, Robert Weinroth, and
Yeah.
shout out to Rob.
Yeah, exactly.
All right.
And I
All right,
think
guys.
that's all we got. Thank you
Thank
for
you.
tuning in. Bye.
Bye.